The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, welcome to the Tiger Technicians Hour on this Tuesday, January the 15th. My pleasure to be here Monday, Tuesday, Wednesday and Thursday and Friday. 877-927-6648 is the number to call in. Thank you, Steve, for 2 great hours. And the Dow right now is only down 20. S&P's down less than 3, or at least it's down 3. So the Dow's at 13,487. The S&P's at 1466. The Composite Index is down 15 at 3102 because of Apple. I was asked if I would go through some of the ChapmanWave notations and in Apple. I'll do that. And we've got gold up 12 at 1681. Now, a number of people are considering that gold is about to have a very, very sharp move to the upside. I'm going to go through that. I can't... I don't see it. I see a bounce, and I can give you exact parameters to look for, but I don't see anything other than a counter-trend rally, and that's just the way the ChapmanWave notation works and the articulation of the different waveforms. We've got silver up 19 cents at 31.30. Platinum is up very sharply at 27, up at 1684, and I believe that has to do something with South Africa. I think about a mine maybe shutting down. I can't. It was just a flash that went by, and I only glanced at it. Copper is down. Copper's down 85 at 362. Well, this is something we have to watch. Crude oil is and we've got bonds up 21.30 seconds. Now it's really interesting to see. Actually, let's do this. I just want to cover everything very clearly. I should have done it yesterday. I went through many things, but not enough. Let's just go through these one at a time. The E-mini, which trades a majority of the day and night, has made a peak B, held the 9-period moving average on the pullback today, which is at 1456.40, and the low today was 1456.50 because it trades in 25-cent increments. And it looks like it's going to make a leg C up above the high of 1471, I think it was. Yeah, 1471.25. And if it does it today, that's... No. 1471.50 was the high of the 11th. Yesterday, the 14th, 1471.25. So that made a peak. 1 penny above 1 quarter above 1471.50. And you start leg C up. Now, I think I'd said to subscribers to my opening call that I'm anticipating. I do a very detailed report, what to watch for every day, how I'm expecting the market to act, what I expect by a certain time of the day. And what I'd say is at 12 noon, if the Dow is... I shouldn't have said that. Now I've got to look it up. Overview section. Let me just grab it here. What I said was, in a whole detailed report, but right at the bottom I said, I do expect a weaker session for the Dow. Minus 40's close if weak at noon. So we've still got 50 minutes to go to find out. But really, we needed a consolidation day, and that's very important. The Dow should be down 70 to 110. The S&P should be down 15. What's happening? Bonds are up. When I last looked, the dollar was up a little bit. So let me explain what I'm talking about here when I talk about this ChapmanWave phenomenon called the stork leg. You know, a stork leg's just got that spindly leg, and then it's got this huge body, and then it's got the neck, and then it's got the head, and the beak comes down. Well, the pattern that unfolds on the way to the body is that every single bit of weakness is met with buying. And buying doesn't last for more than a day. A full consolidation is like 3 days. And then finally, it gets to a period where it starts to make slightly lower lows, slightly higher highs, and that makes an arch formation at the top and a cup formation at the bottom. Basically, it becomes an oval formation. We saw it perfectly in the 120-minute chart. I typed it in leg, If you're looking at Tiger TV, you'll see there it is, the leg, the body. I've been talking about this. And what I'd said is if it goes above 13,466, it starts the neck. The neck goes up, and in fact, it's gone all the way to a peak D in the 120-minute chart at 13,520.18. Now it's starting the head pattern. There's a chance that if we close weak at the end of the day today, that the pattern says, yeah, be careful, because you could go back into the body of you can go back into the body of the oval formation, and that body said if it going to slide from here, 13,466 is the level to watch, because if it touches that, then it could go into the body before it has a decent rally. Well, lo and behold, what did it do today? It went to 13,445. Just snuck underneath that high. So in a sense, it's completed what it needs to do. It can continue doing this, or it could turn around from here. But it basically has completed the upside action that one would expect in this particular pattern. The volatility index, the VIX, is only at 13.57. This is buying intensity, folks. I just keep it as simple as possible. The short-term trend index is at 0.85. There's I have no reading there at all. I mean, nothing of consequence. The daily chart of the Dow has gone to a peak B if it doesn't break above 13,478. This S&P has already made peak B at 1472s. So it needs to have a spike above 1472.30. If it goes to 31, it starts the next leg up, which is C, and the S&P and the Dow starts a new leg up above 13,478. That's as simple as I can make it. I do believe this is a very important consolidation day. I believe very strongly that we're looking at stocks that are in certain sectors and in certain categories. There are stocks that are extremely overbought, that absolutely need some downside action. And if the downside action unfolds, it's actually going to turn their monthly charts into more intermediate term to slightly longer term sell modes. And in that category, I put stocks like AZO, AutoZone, CMG, Chipotle, Mexican Grill, Apple, and I was asked to do Apple. We'll go to Apple in a moment. Apple's trading at 487.64. This is very important. Why? Because it's broken the 486 left side low bar of importance. Let me do it right now. In the weekly chart, and of course, being a weekly chart, we need to wait until Friday's close. But intra-week, we can easily say, we can at least dissect enough information to be able to say certain levels are either being touched or broken. There's a candle in the weekly chart from the week of 17th of February of last year, where the high was 526.29, the low was 486.63. So 486.63 was where I drew a left side, right side price time match, which went out to the week of the 1st of February. I could have made it shorter than that using my candle formation. I probably should have, but that was the one that struck me as the most important. The next one would be on a shorter basis, which would have been, I guess, a real perfect one, right there. In fact, it's perfect to the day of the test. And that is using a particular candle. I go to the left side, right side price time match, and that goes to the week of the 21st of December of last year. And that low was 501.23. And on that particular day, the level that I'd be looking for was 528.60. I'm sorry. 486.63. And the high there was 526.29. So it went into that area. But it didn't break it. It had to wait for this week to break it. Now it's broken it in a more extended time frame than that left side, right side price time match. The MACD is still very negative. Stochastics flattening out. So it says, yes, Apple is going to be impacting the Qs, the QQQ trust. But at the same time, the market, I believe, is starting to say to itself, we are really close to discounting Apple's affect and Apple's effect. Therefore, the Qs, if you try to match charts, I was showing this yesterday, has a different chart pattern. It's made a leg C in the weekly chart, 67.34, 67.29. It's made a peak C last week. It's holding really nicely. It's well above the 9-period exponential moving average at 65.82. Hey, this is so far not a bad consolidation in the Qs. If you consider what percentage, even after dropping 200 and something points in Apple, what percentage it is still of the Qs. It has an impact, but not as big an impact as you would think. And I've got a feeling it's going to start to discount this. Let me just go through my analysis here in terms of what I wanted to see. I'm going to go back to Apple in a moment. It is important to give a perspective of Apple. But I've got this as a peak B if there's no new high in the Dow today above 13,520.18. I can only say to you that as remarkable as it seems after so many moves and that huge gap to the upside and that massive move to the upside on the 2nd of January, the psychology of the ChapmanWave stalled leg is that even as the consolidation of the oval formation unfolds, that's what we saw in the 120-minute chart, it is a fairly narrow consolidation. That's why it's an oval formation. It needs more time than price. It needs to just consolidate, and then it spikes above the oval high, the body of the stalk. Well, in this particular instance, there's a pattern that I call the ChapmanWave falling axe pattern. And that's in my CD introducing the ChapmanWave methodology. And what it says is there are declining highs and sharply declining lows at a certain point. The handle is very long. It's usually at an angle. In this case, it's almost straight up. The axe blade is always pointing down. And in this particular instance, if it breaks above it decisively and goes past the left side high, in this case for the Dow, it would be the high of the 13,447 high of the 4th of January, it should do a 1-to-1 to the upside at least. And that can do another 1-to-1 later on. We've seen in the transportation index many times over the many years how they love to do that particular pattern. Well, so far, this is actually very good action. The 9-period moving average of 13,417 hasn't been touched. I like what I'm seeing. I like what I'm seeing in the weekly chart, leg B up. So I believe that it cannot be until about Monday before the Dow can give me any kind of a sell signal. I'll be right back after these messages with Mike in New York.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians. It's my pleasure to be here. And let me just double-check something. Just checking on a particular issue that I'd never seen before. Never heard of it, in fact. So, we're going to go straight to our first caller. We've got Mike in New York. Hi, Mike. How are you?
Good. How are you doing, Basil?
I'm doing well, thank you.
Excellent. I own Derma Sciences, and I'm considering selling some of this.
Let me just ask you a question. Derma Sciences, it's a research, or they have a product? What specifically do they do?
Wound healing, diabetic ulcers and.
Okay, so they've got a special, some kind of a cover, some kind of a medication.
They actually have. You would know this, Manuka honey from New Zealand and Australia. They use, and they also have bandages, and they also have a biologic that's in clinical trials too. Okay, very good. Because the types of bandages that they have these days, really, I'm always in absolute awe of the medical technology field and the biosciences and all that. What's happened is, I have a friend who went in, actually while I was doing my show Wednesday a week ago, he had gone in to have his hip replaced, and it had deteriorated so badly from the time that it was diagnosed to the time that he actually went in
just within 1 week before the operation was scheduled, he went from kind of walking around, not easy standing up and all, but he was managing to, on the way to the hospital on that Wednesday morning, he could barely get into the car. Do you know that 2 days later, they kicked him out the next day, and he was walking around. He's been walking with crutches, but he goes for long walks. This is just, it's unbelievable. Hip replacement. It's just, what an age we're in. We can grumble about many other things, but wow. In the sciences, it's been absolutely fantastic. So I'm looking at this stock, and I'm saying to myself, there's a certain haphazardness that you look for in stocks in the medical field. And very often, if they're in biotech, what happens is they come out with news, and it's in certain cycles. You can actually see it on the chart. You can see how they time their any abstract or anything that's come out in terms of papers, how they will time their announcements. There's some stocks you can see every 3 months they have this fantastic spike, and then plop, they go all the way down. This one is very different. I'm impressed looking at the chart because there was a move from, folks, DSCI we're looking at. It is at $12.11, up 8 cents. It made a low on the 17th of August of last year at $9.10. And then it's made it's like a stair-step move, just a beautiful, beautiful picture of walking the 9-period exponential moving average. One of the techniques I talk about, if you use a 9-period, I love to use the exponential moving average. It puts the greatest weight on the last close. And in this particular instance, as I've always said, the reason why I love the exponential moving averages for the ChapmanWave is that most of the time they are hugging the lows or stopping the highs at exactly perfect points, enough times for you to say, wow, that is impressive. Now, if you're looking at this, you can see that it's gone peak A, B, C, D, a very quick E, which should have started a brand new peak A to B to C. Instead, I decided I would continue the wave count if it was just one penny, 11, 11, and 11. Oh, I thought there was something wrong. Okay, good. It did that. I thought there was an instant restart here. I just didn't want to do it because it would have been guessing. But it is an instant restart, and that is perfect. So I've got exactly what I was looking for. Either way, it went to a high of importance. I'm just going to do this because I love to have my technique displayed correctly. Otherwise, what's the point? So I'm just going to fill this in here. Give me 1 second. I'm putting an A, B, C, and D. Great. This has consistently gone to D. It had an instant restart, the ChapmanWave instant restart on the 1st of October. Within 2 bars, it broke to a new high, which had a parallel wave count, but I'm counting it as A, and then it goes to B, then goes to C, finally goes to D on the 5th of November, and now it's pulled back. But what did it do? It pulled back above the 200-period exponential moving average, and I'm going to just, because I need to be absolutely sure, I'm going to go through 1079. I'm going to go through my wave count to the top as well, because it's very important to be able to tell you whether or not this is the time to take something out or whether you should have patience to hold. I'll be right back with Mike in New York looking at DSCI.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Dow's down 16. S&P's down 283. I have to tell you, this internal strength, the VIX remaining low, is really important, plus the pattern that I call the stork leg formation, the psychology of every time there's a dip, there's buying coming in. It's just the day's young, but so far it's really impressive that even up until now there's been just a moderate decline, but a very nice rally that's gone from Dow about minus 50 to now only down 17. That's kind of important. Now, I've got a question to ask you, Mike. This is I've never seen a chart like this before. I'm not sure whether this was is this a very closely held company? Do you know anything? Do you know anything?
150 million market cap.
How much?
150 million.
So it's a fairly small company, but
it's doesn't trade a lot.
Right. I tell you why I asked. In May of 1995, it comes out as an IPO. It opens at 205. It goes to 220 and it has a low of 200 and it closes at 210. All round numbers. The very next month, it has 220, 220, 200. The next month it has 200. It's exactly the same thing with 5,061 volume for a whole month. And it kept doing that. It went 1, 2, 3, 4. Then it makes a lower high, 215, 5 times it went to exactly the same thing, 220 high, 200 round number, and a close of 200. This is very interesting. And then it came down, and boy, did it come down. It came down all the way to the most recent low. Well, it came down to a low of $4 in August of 1999. It has all these round numbers for a monthly chart, and then it makes this most recent low of $2 round number and $4 high in November of 2008. I have to tell you something. This is one of the weirdest charts I've ever seen on for a monthly chart. Why? Because to have a round number at the high, a round number at the close, and a round number high or low that stays throughout the month and consistently is really unusual. So I think something's going on in this company. I would not be surprised if there are buyback programs or something that are going on. I'm very impressed with the chart. I know that the pullback from this peak C that it just made in the daily from 1289 down to the low of yesterday of 1188, that's one of the sharpest declines. That's a point. It's about it's almost like 11%. And now it's holding the 9-period exponential moving average, but the fast moving average is still very strong in the MACD, and the stochastic still at 82%. I'm inclined to say to you, now I'd normally not do this. Normally I'd say take something off, and especially if you're the one that initiated the idea of taking something off. But I'm going to suggest to you that if you want to take something off, then take something off. I'm not going to interfere with that thinking of yours. Take something off, but only take half of what you wanted, and take the other half, put a stop of $11.87, 1 penny below yesterday's low. I'll explain why. It looks to me, since this is peak C and it's so consistently gone to D, even though it's leg E in the weekly, that E in the weekly could turn out to be a brand new A because of the stochastic, which is trying to rally. It's at 65%. MACD's turning up. I agree with you that it would. You don't want to give back profits if it starts to, break down from here. But something about this stock says to me, the rising, just the steady higher highs, higher lows, higher highs, higher lows. There's accumulation of some sorts going on, and the monthly chart is walking the 9-period moving average. I'm sure you've noticed that. MACD's good. I'm inclined to say to you, I know I shouldn't do this, but if you can keep your core position and your trading position, which you're suggesting you've got in your mind here as taking some profits, scale a little bit out of the shorter term position that you want to take profits in. But I would give it a day or two, because if it does not take out 1188, but instead in the next 3 days it's able to rally to 1226, I think that's going to be on its way to leg D. You understand what I'm saying?
Yeah, sure.
Now, you love to look at the fundamentals and all, and I suggest that if you look at the fundamentals and you look internally, I'm going to recommend, in fact, we can speak about this another day. I'd like to know what the insider buying is. I wouldn't be surprised if there's insider buying rather than the insider selling you'd expect in the steady move up with a sudden spike from the previous high of $11.89 all the way to the recent high of $12.89. That's, for this stock, that's a very quick and sharp move to the upside. If there started to be some insider selling, I'd say, okay, I think you're right. It looks to me like there's accumulation. So I like it. I don't. If your plan was to take something off, I'm going to say to you, take some part of what you wanted to take off. I would not take the whole thing off, because even the 120-minute chart says, yeah, there could be some backing and filling, but it might hold 1188, the low of yesterday. So that's all I'm saying is that I'm kind of impressed with this chart, and I realize that it could in fact drop all the way to 1177 and then start a big rally, because it's had those kind of moves. But boy, this is nice looking in terms of just the steadiness, the way it makes new highs and it pulls back and it builds another base, then it goes up. I'd love to hear what Ken Shreve, because this is the kind of stock pattern that I know he looks at, so I'd love to hear his impression. So thank you so much for calling. I hope I've helped you. I do like it. Even though it could be a peaky in the weekly, it looks to me like it's going to try to rally to the 1230s soon. And if it does that and breaks above 1238, 1242, I think it's kind of home. It's done its consolidation. Nice eye. Good eye. And congratulations. Let's go to Shu in Boston. Hi, Shu. How are you?
Good, Basil. How are you?
Did I pronounce that correctly?
Yes, you have. Very much.
Good. And we've had a drop in the weather, haven't we? It was beautiful yesterday.
Yeah, very nice today out there.
It's nice, but not as nice as yesterday. Yesterday was a beauty. You'd like to look at?
Arena. ARNA.
Yeah, okay, yeah. This is one of my favorite stocks that always gets away from me. I can't believe it. I had another opportunity to buy this thing. Are you in it? It sounds to me like you're in it.
Yes, I'm in it already at 10.17.
Oh, that's great. Okay, folks, we're looking at a stock. This is funny. This is not exactly the pattern that I was looking at with Mike, but it has the same kind of pattern where it made its sharp move down from peak D in the weekly at 1350 all the way down to 695 week of the 3rd of August, and now it's got the steady move up, and it broke out yesterday. It started to break out, and this is in the new move. It's leg A. Got to get that right. 97. Yeah, this is A, B, C. This is leg D in a brand new. Oh, I love this stock. I can't believe that I missed it. Arna Biopharmaceuticals, Biotech. It's one of Arna and Aria are the stocks that have been on my list for ages. And I just, every time I want to buy it, it drops so sharply that I thought, oh, thank goodness I didn't buy it. Look at the move that it went from 957 on the 19th of December. In 3 days, it hit 857. That's a big percentage move. And look how quickly it's come back. Stocks don't usually come back this quickly unless the selling is emotional selling for some reason, whatever it is. Let me explain what we're looking, folks. We're looking at ARNA, Arena Pharmaceuticals. It made in the ChapmanWave, it made a peak E back on the 17th of October at 10:05. It drops sharply down to 7:09 on the 7th of November. Has a brand new move that goes to peak A, peak B, peak C. Makes a cup formation, goes to a D at 9:57 on the 19th of December. Then has another quick drop, but it's making higher highs and higher lows. And now it's got a beautiful move. Let me just type in here. It's gone to A. This is B right here. C was 5 days ago, and this is leg D, and it broke out above the previous high. That is really important. Oops, don't know what I did there. I was getting a little excited, and my finger held. So, okay. And the monthly chart. Now, this is the rule of thumb that I have. If you're looking at the monthly chart, you look at the monthly chart that stopped dead at the 200-period moving average at 13.50 in June of last year. That was leg D. Then it came back down, but the candle formed is a candle that I call the inverted ChapmanWave Roman candle. And my rule of thumb is if it can get into the candle and go halfway into it, and that would be about $13.50. But we're looking at a monthly chart, and then it needs to close near that for that particular bar. So if it was a 1 minute bar, the 1 minute has to close there. In this particular instance, it wasn't able to close there the week of, in July of last year. It went to 12:07. But now the month is we're halfway through the month exactly, and it's at 10:77. It is getting close to the 11. Let me call it to be safe. I'm going to call it 11:26. If this thing gets to 11:26. There is no reason why, in this particular instance, it doesn't fill the entire wick all the way to 1350, and in fact, it should spike above the 200-period moving average this time. I love it. You've got yourself a great entry point, and all I'm going to say to you is that stocks like this, you can see, are capable. When they get to this peak D or E in the ChapmanWave, in this particular instance, they are capable of giving a quick and sharp pullback, especially when you're in the biopharma area, which this is. And so Arna Pharmaceuticals right there. So I like it. I think you've got a great entry point. But what I am going to suggest, just to be a little cautious, split the position into two. So you got your core position down in the low 10s, and the other position says that if it's able by, today's Tuesday, Wednesday afternoon, if it's trading anywhere into the 10, the high today so far is 1081. If it can get to 1090, but if it can touch 1101, some part of your position, I would just have a trading stop at about $10.55, just to make sure that you're going to reward yourself for being correct, because it is leg D in the daily, and we've seen that leg D very often has a quick pullback. The way I'm looking at it, the way the MACD is acting, I think it is going to go to try for the 11s. So is your thinking to hold a buy and hold? You'd like to do that, or is this a trade?
It's a trade.
If it's
a trade, to buy it somewhere around when it gets 7 down to average it, but then I didn't have heart to go do the average because it's pulled back so much.
That's what I'm saying. The pullback's already sharp, but then the way it goes up is also sharp. I'm going to make the suggestion that to stay with what I just discussed. What I discussed fits very nicely into your trading position. What I will say to you is, if we don't know with stocks, something's going on in this company that is really positive. If this stock, I need to look at the 120-minute chart. So then let me do this quickly. A, B, C, D. A, B, C, D, E. So it's getting a little extended in the 120-minute chart. $10.24 is the support in the 120-minute chart. But if this thing is able, by the end of the day, if it's able to get into the 1085 to 1090 area, that means you've raised the base of support. So I'm going to stay with the thing. Keep your core position, use the trading position, and you might find that you do at some point in the next 3 to 5 sessions get stopped out of your trading position, but you still hold your core. Then I would re-enter the trading position probably at about 1038 or 1040, somewhere around there. So you keep your core and you can just keep trading with your the position that you have as a trading position, but the core stays at the entry price. Make sure that you don't lose any money on your core position. With a biotech, you always must guarantee yourself a profit, so at least put a stop in above your entry point.
Okay, excellent.
And congratulations for having the courage to just step right in, and that's a great position you got. That's really nice to see. I'm thrilled that I'm speaking to someone who's been able to trade Honor Pharmaceuticals correctly. Congratulations, Shu. Thank you for calling.
Okay, thank you. Bye, Basil.
Bye. So that's Shu from Boston. We're looking at Arna, which is Arna Pharmaceuticals Biotech. Wow, it's now at 1080. Somebody's listening to Shu's trade. We're going to go to George in New York. Hi, George. How are you?
Basil, good morning today. How are you?
I'm very well, thank you.
Good. Basil, today I want to look at a company called Memic. The ticker is WFR.
Wafer, yes.
Yes.
So
it makes silicon chips.
I used to have this thing notated every which way. I'll call Trade Station today and see if I can get that chart back again. It's there somewhere. I'm missing it. Wafer, folks, which is MEMC. This wasn't Memtech. This was always called MEMC.
Memic.
MEMIC.
MEMC.
Yeah, Memic. Okay, I always wondered how you pronounced it. Electronic Materials has the symbol wafer because this is what they do. The semiconductors. The break right now gives it. First of all, are you long?
I'm long, and I have synthetics as well.
Okay, great. Now I know what to do. Okay, I'll be right back with George straight after this break.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. I just found an error in this thing. I knew that something had to be wrong. A, B, C, D, E, F, G. Okay, that's what it is. All right, so I've done that. We are on with George in New York. I'm just trying to finish the chart here. I had to go back a little further than I usually do. I'm looking at the chart. Is it 302, 302? There we go. So I'm going to put that in as a C. That is a D. That is an E. And then there's this right arm extension leg F/A, and we won't know what it is till a little later. Okay, I am ready. Now, let me just tell you what I'm looking at. First of all, if we look at the monthly chart has the pattern that I call the Eiffel Tower. It goes straight up, and this thing went, folks, it went from in the threes all the way to 96.08 in December of 2007, and then it plummets down. A year later, it's at $10, and then it goes even lower, and it goes to the most recent low of about $1.44. So it's had a spectacular move from $1.44 to 3.81. Think of it as a stock going from 144 to 381. I mean, that's a pretty big move. But one of the issues that I'm looking at here is that in the monthly chart, in the weekly chart, sorry, this is leg E. It's very strong, but because the technicals have been absolutely superb, you have to wonder, it's gone up 100%, but you have to wonder why it really isn't trading up near the candle of February of 2012, the 5.95 area or the $5 area. So it's used a tremendous amount of energy just to get back to where it was before it broke down back in March, April, May of last year. Now, what we look at in the daily chart, and I love when you look at time frames. If you look at time frames, you can be in a bull move in one time frame and a bear move in the other time frame. Mm-hmm. So when I look at the daily, it's had a spectacular move from the most recent low of $2.15 on the 12th of November to peak ABCDE. That was at 341 on the 20th of December. It pulls back, and now is this a continuation of E to leg F, a right arm extension? It has all the characteristics, except that the MACD is still holding really the fast-moving average. It hasn't crossed negatively. So at that point, it says, you know what, it could still have a bounce, and the bounce could go to 398. I'm inclined to say at this particular time, if your bias is towards the long side,
yes,
I think that is still the correct trend. The tide, I think, is still upward in this stock. Where I would get real negative is if one of two things happens. If it cannot break the candle high of yesterday of 397 in the next, I'd say next by Monday. If it hasn't broken it, but in fact it's made a lower low below 364, then it's going to give back quite a bit of this gain that it had, just the recent gain from 303 to the high of 413. That'll be a 50% decline. My eye says it'll be somewhere around 355-ish. That 355 to 350 is going to be really important. So what I'm thinking here, because I know you like to look longer term, I'm going to say
the only thing is, just so you know, this one really doesn't fit my standard criteria.
It doesn't even fit.
Earnings are erratic on this, so I'm looking really just to move this maybe to about 5 and change, and then I'm going to get out.
Okay, because I was going to say it's also about 2 points lower than your usual entry points in low-price stocks, right?
Well, that plus it is a large-cap stock, you know?
Well, no, it's a large-cap stock, but I mean a low-priced. So I like it. Let me put it this way. George, I like your position. I think it has merit, and my suspicion is the moment it takes out $4.13, it's going to be quickly on its way to $4.35. That's going to be key. Thanks for calling, and nice eye. Good eye. Thank you for calling. George in New York. Folks, stay tuned. You've got Tuesday. You've got the option hour. Oh, that should be fun.
Are you looking